Hello and welcome to Pro Trader Strategies Market Commentary for Monday, January the 30th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We have had a little bit of economic data, even though Mondays usually are pretty quiet for economic data. We do get some today, and it's pretty important stuff actually. So we got German preliminary CPI, which is Consumer Price Index, came in slightly lower than expected at 0.6% versus the negative 0.5%, so a little bit lower than expected there. Then we got Spanish flash GDP came in at 0.7%, right in line with what was expected. Here in the United States, we got the core PCE index, which is the personal consumption expenditures, and this is the core aspect of it, which means it strips out food and energy because it tends to be a little bit more volatile. Came in more right in line with expectations at 0.1%. Then we got personal spending came in at 0.5% higher than the expected 0.4%, but on the other side we got the personal income coming in slightly lower than expected at 0.3% versus the expected 0.4%, so a little bit lower than expected there. We also got pending home sales coming in line with expectations at 1.6%. So those numbers not really giving the tell. It's not giving us any real outlook. It's kind of all hunky-dory there, but the overall markets are continuing to slide with the commodities and equities, bonds and gold acting lockstep to a flight to quality and are pushing slightly higher. Here we've got the crude oil futures down about 50 cents on the day, trading around 52.66. And as you can see, once we got below that resistance line of the value area high, I've been talking so much about the markets really starting to come off there and pushing back in a way. Then on to gold futures. Gold futures, this is what I was talking about with the equities down. Gold futures are going to push higher. Gold testing this 9-day, it's above the 50 days, so that was a line in the sand to get through. If you remember on Friday, it had trouble getting above that. This morning we opened above that and are pushing higher as we speak, albeit gold futures only up about 7 on the day for the broader market being down, and bonds just treading water above positive right now, up 3 ticks. Tested that 9-day moving average, which is going to act as resistance, and kind of has since come off. Needs to really settle above there for any movement to the upside for the bulls to kind of champion. Then on to the Dow Jones. Dow Jones down quite big today, down about 180 points right now, and below the 9-day moving average as the broader markets are coming off. Back below that historical 20,000 mark that everybody's been talking about. It's kind of just a arbitrary number, but keep in mind we are down 190 points and below that 20,000 mark. I don't know if we're going to see that again for at least a few weeks, the way that the market's kind of sizing up right now. It's covered this gap that we made to the upside and kind of made a topping pattern here on Friday. Then with the Nasdaq, similar situation. You know, this doji here that I talked about on Thursday was looking pretty bearish. Then we got that blast off to the upside. Looked like it hadn't gotten confirmed, but it didn't really engulf that entire candle. So it was still, up in the air as to whether or not the market was really topping out. But today, looking like a solid confirmation to the downside, with the Nasdaq being down over 60 points right now. Then on to the E-mini S&Ps, following suit, down over 21 points, if you will. Again, same situation. I talked about this. This looks like a topping pattern got confirmed pretty much to the downside on Friday, although it would have been nice if it really settled a little bit further down. But today, the push to the downside on this big move really kind of confirming that it looks like the top is in, at least for the near term. We could easily see it kind of settle down back here where we're starting to get this volume node, but I really think it's going to come down here and test this value area high, in the next few weeks. This is the daily chart of the E-mini S&Ps. As you can see, we kind of opened up Sunday night, gap down. The market continually just traded sideways, but on the open of the day trade, the overall market didn't even make an attempt to go up there and print those highs of the overnight, which I talk about so much that the day session has a tendency to want to try and print the high and the low. In the day session, that doesn't look to be the case right now. A lot of chartists are going to talk about this gap move too, especially the ones that just look at the day session. That's going to look like a big gap down that will at some point need to be covered during the day session. So we'll have to see how long it's going to take to get that to happen. The only thing that I've actually done today, and it's actually hasn't even happened yet, I've been chasing this market. I tried to get out of this on Friday. Just was very close to 50% of my max profit potential on this. So I was trying to get out of that. I did this as a long call spread in the March. So I did the March 95 110 call spread in there, and I originally paid $7.76 for that. Now on Friday I was trying to get out for a little bit, right around $11, just shy of that. Never came into fruition. Today with this big mark down, it looks like it's a confirmation to the downside anyway, or at least a near-term top. Although it's in March and I have a lot of time in there, I'm not going to risk any more of the profits in here that I have. So I'm trying to get out of this trade for $10 and about 50 cents right now. As I said, it started out earlier this morning. It was looking like I should have been able to get filled, but it didn't happen. So I'm going to be playing around with that for the rest of the day, maybe lower it every 10-15 minutes to try and capture maybe a little bit of a bounce up in this trade. But as of right now, it's a working order, so I'm trying to get out of that and haven't gotten filled. So if you guys are in on this trade, the only thing I can say right now is kind of trying to work out of this one throughout the day and not really just give up too much edge. That's about all I got for you guys today. Friday's webinar is going to be on the long put butterfly. Now, this is the last part in this series. We did the short call and put butterflies. Friday, we did the long call butterfly. Now we're going to be doing the long put butterfly. And then after that, we're going to be doing broken wing butterflies. So go to protraderstrategies.com, sign up for those for those webinars. Always great time. The more the merrier. You guys had some great questions on Friday. I hope I answered all of them. And going forward, anytime you want to reach out to me, please do that. You can reach me at trading@protraderstrategies.com. All right? That's all I got for you guys today. If you can't take that, take it easy.